Hello and welcome to another episode of the Monthly Market Report. I'm Justin Nielsen. I will be hosting for you while Allie is away on her maternity leave. So I've been doing this for a couple months. I'll probably be doing it for a couple more. But you know what's not changing here? Jim Roppel, our guest for every monthly market report. He, of course, is the writer and creator of the Roppel Report and uh, just an all around great guy, I should say.
I'm gonna tell my wife
uh,
that.
you know what? She knows. She knows. As much as she'll keep you in line, I think she's happy to do it. And in fact, you know what? I'm already seeing in the comments on YouTube. I think there's a new game that's going on. It's like a drinking game. You know, every time you say golden goose or the key gym phrases,
American
we're gonna
exceptionalism.
yes, exactly. So
I'm raging bullish.
let's get right into it, Jim. And I'm going to pull up a chart just for fun because we know how much you love charts, as we all do. Here is well the Nasdaq. Let me just pull that up real quick. I had Uber up because you're Uber bullish. Nasdaq Composite. Okay, we're knocking on the door of 24,000 here for the Nasdaq, and gosh, October, another strong month in the books. It didn't feel like it was going to finish that way, especially after this October 10th, jostle here, where President Xi was talking about, hey, I'm going to curb these rare earths, and President Trump was saying, oh yeah, well, I'm going to get some tariffs on you. A lot of back and forth action, but man, the last week after this breakout above the 23,000 level, and then it just continued on. Had some earnings helping along, but Jim, overall, what's your take?
So I had a rough day that day, really bad.
Oh
But
yeah,
the reality is that's secondary. It's important. Trump G tariff negotiation important, but it is a distant second to AI capex for 2026.
hmm
So when you get a bad break and then support, it's a buy. It's any break is a buy into support as long as AI capex goes up. And it's, dude, it's honestly, it seems like it goes up by 10 billion a week.
yeah,
It's not just the absolute number; it's the rate of growth. And
hmm
it, you know, I have charts of this, and I look at it, and I'm like, I can't even believe it. It makes the build out of the internet look small. And you
hmm
know what makes that looks? You know what makes the AI build up or semiconductor growth look small? Humanoid robotics total addressable market.
right.
Like it's in the trillions. I mean, I don't think we've ever in human history seen these many disruptive innovations, not in the future, but starting to get traction. Like
Yeah.
the robo taxi in Austin and the expectations for 12 cities by New Year's Eve. Yeah, that's why the market came raging right back.
hmm Yeah. So now, again, when you see a day like that, there's always that fear. Okay, if this gets worse, how do I protect myself? It's been a great year so far. I don't want to lose it. I don't want to mess it up. And there was certainly some parts here on the seasonality side where the sell in May go away was not a good call here. I mean, the summer was so great. September even, which is usually a weak month, was phenomenal, and October again followed up with it. But when you're looking at that and you're trying not to mess up a good year, I think it would be very natural to say, oh well, gosh, I got to do something. I got to protect my gains. And especially as we were going sideways, I think it was very unclear of direction until again you got this day, then this day, where it's like, oh okay, the market is coming right back. But I also want to address one other thing here, because RSP, which is the equal weighted S&P 500, that hasn't looked so great. I mean, this is trading below its 50-day moving average line. This is the equal weighted S&P 500. So it certainly seems like it's a little bit more of that return to a narrow market, the big market cap leaders, the $1 trillion club, that's driving a lot of this.
So I don't want to trade from a position of fear.
hmm
Every pullback is not 2000 or 190809 pullbacks, you should expect 4.1 pullbacks that are so severe per year that you need a follow through day to validate an ongoing bull market.
Hmm.
And we are 7%, 6% over the 50-day. We had a churn day last Thursday, or distribution day Thursday, and then Friday was churn-ish. But I'm just not, look, this is very reminiscent of 2003,
Hmm.
where canceling was not in gear, but a ton of money was made. And I made a huge mistake that year. I did not follow the leaders. I followed the, right now, there are a lot of extremely high quality names, very, very, very much in gear. The broad market is kind of just like you pointed out, RSP, but I don't own RSP. I'm not
Hmm.
trading from a position of fear. The leaders are acting spectacularly. I mean, honestly, I was on a call with hedge fund managers this afternoon. Every Monday I have it. And I said, you guys, would you say this is the strongest bull market you've ever seen? And the consensus of these four people, which almost all their names,
Right.
they said, well, post COVID was stronger,
Hmm.
and the blow off in 2000 at the first top, intermediate top in the internet build out. So other
Hmm.
than those two periods, and I've had 40 years experience, this is the third most powerful bull market I've ever seen. Now, if I go, oh, look at Dutch Brothers or look at
Yeah.
Chipotle, the consumer's struggling. And
Yeah.
in these conference calls, management is saying that. But I don't have to own everything. I don't own RSP.
Hmm.
I mean, look at BE. Okay, there's an energy. The bottleneck for AI build out is energy.
Yeah.
So you had Satya Nadella say, I have GPUs that I'm not using because we can't get the energy. Energy is probably, I'm not, look, okay, can we just talk about it right off the bat? The
Let's get to
trifecta
it.
in the Roppel report, last night I wrote about the trifecta of breakouts.
Hmm.
We had NVIDIA.
A small little chip company. That's
So,
just getting some
I mean,
traction.
energy matters, but
Hmm.
NVIDIA is the king of the stock market jungle. Okay, it is the General Motors of 1940s. My boss from who early on hired me said, as General Motors goes, so goes the market. Well, that was 40 years. That was 40 years ago. As Nvidia goes, so will the whole market, and it is
Hmm.
broken out decisively on massive volume. It was the biggest volume in months.
Hmm.
Okay, that cannot be overstated. But then throw in Palantir, broke out a few days ago, and after hours, it's up a few dollars. It's no big deal. But the breakout occurred a week ago.
Right.
Okay. Now you got Tesla limping out. That's the trifecta.
Hmm.
With those names in gear, it is going to be extremely difficult to have you said, Jim, Trump had a spat, market fell 2 or 3% that day. Look, as long as these three trifecta dominant leaders are in gear, we're not going anywhere but sideways to up.
Hmm. You know
Okay.
what? Real quickly, I want to go back to Nvidia for a second, because again, and by the way, I do have a position in Tesla, so I need to disclose that when we talk about it. But Nvidia, let's do a quick contrast because I'm not sure if you're aware, David Chung and David Ryan over on IBD Live have a bet on whether or not Nvidia or AMD is going to be the big performer, and so far AMD is winning by quite a bit. So you also throw in Broadcom in there and a few others. So do you want all of these participating, or is it enough to have one, or is it okay that AMD is starting to kind of come on a little bit stronger than Nvidia lately? How do you kind of look at the trifecta there in terms of the leadership just within the chips?
So I'm talking about general market health. And
Hmm.
I wrote very recently, I said, NVIDIA, this was before it had broken out. I said, NVIDIA is healthy, but it is not robust.
Right.
Okay. There are other semiconductors which are robust, and AMD is clearly one of them. And
Hmm.
AMD, their big deal they just did it's a big deal. And the
Hmm.
market is reflecting that. So I don't need NVIDIA to lead the market with robust power, but I need it as an underpinning for
Yeah.
the general market. And by the way, it's only relative strength 90 with the biggest market cap in the world. Like,
Hmm.
gentlemen, by the way, accumulation distribution is now up at around B from D.
Hmm.
I wouldn't say this is a laggard, although AMD, and it's a great bet. What's the strongest semiconductor? I mean, look at the hard disk manufacturers.
Yeah.
They're unrelenting.
Hmm.
Again, I'm
Yeah.
not looking at RSP. All
Right.
right. I'm where the leadership is. Always follow the relative strength in the monster sectors. And I mean, STK.
Hmm. I do have a position in STK. Yeah, this is just, and I did have a position in WDC. I tried to get cute, and I was selling into the strength, and I was going to buy it back. Then earnings were around, and so I switched to STK as my exposure. But yeah, that one is also, and we'll go ahead and throw in SanDisk in there.
Dude, that is
Uh,
one of the most powerful initial breakouts. Eve quantified it as a super gap. You want candy? Do you want
oh,
the
by the way, I
definition
think
of
I
a
think I kept on saying STK, and it's STX that we meant Seagate, right?
can you go back to can you go back?
Um, or is it STK that you meant? Yeah, that's a
Um,
closed-end fund. I think it's STX you meant. So,
what
um,
were you, okay, so um oh my god, I'm having a meltdown. What's the other one that is so crazy powerful? Same
WDC.
SNDK.
Oh, SNDK. Yes,
Okay.
SNDK.
So this thing had a super gap, okay? And Eve qualifies it as a breakout in right there on
Mhm.
September whatever, a
Well, so
breakout
yeah,
into
you have.
all-time new highs, a breakout of 10% or more on, and by the way, the first bar that Justin just drew, that looks like puny. If you look at if you that's a massive uptick
18% gain, and it looks like nothing.
into all-time new highs.
A 14%, gain just like a week and a half later.
Volume explodes. After hours, it goes higher. Pre-market the next day, it goes higher, and then it closes at the high. Okay. This stock doubled from 50 to 100 without a down day.
Yeah,
Okay. That is the
incredible.
definition of a super gap. We've had others. It's possible that it seems impossible that a heavyweight like Amazon could have done it.
Right.
Okay. You, I don't care about RSP.
Hmm.
Look, can you pull up the weekly, please?
On Amazon.
Yes.
Yeah.
This thing was a lethargic laggard
Hmm.
18 days ago, and now it's out. Um, it's really hard to get too bearish when these critical. And by the way, look at NET.
Yeah.
I've been writing about net like every week, saying it's going to come out. It's going to come out. Or I didn't say. I said the pivot is
Hmm.
231, and it yesterday on earnings, and this company's products, the breadth of products that are partially free are so sticky. And now the earnings are starting to accelerate. Sales are starting to accelerate. It's broken out into all-time new highs. There's so much going right now.
Yeah. And again, it really depends on where you're focused. So, um, just as an example, if you look at XLY, consumer discretionary, spider sector, this is looking like right on the verge of the breakout. Of course, Amazon and Tesla are the two biggest components together. They make up about 40% of this ETF. Meanwhile, again, if you look at the equal weighted of the same stocks that are in this consumer discretionary sector, if you do equal weighted, it's a very different look. To your point, consumer discretionary has some issues, right? But not all of them. There's the strength in Tesla. I do have a position. There's the strength in Amazon, and that's just like those are the market cap leaders. Those are the market cap heavyweights that are kind of driving, um, driving XLY, and RSPD is just not the story here.
Do you remember a guy named Don Hayes?
Yeah, that does sound familiar.
Okay. Again, this is 35 years ago, but Don Hayes was kind of like the leading market strategist at the time, and he said, "There's always a boogeyman. There's
Yeah.
always a boogeyman." And right now, we've got this incredible technology, AI, which is basically like digital employees. Microsoft lays off 19,000 people, their margins expand, and the stock goes up 40%. Now, there's a kind of a not, there's not a hiring freeze, but hiring is stalling. Unemployment is rising. People in New York are struggling. What I'm saying is, if you're looking at all these things like equal weighted consumer non-durables or consumer durables, you're looking at the boogeyman. You're not looking at what's making us money.
Hmm.
Mondami is going to win in New York by a landslide. Okay, it's because unemployment's rising, people can't afford to live in New York, inflation is a problem, and I'm not looking at Chipotle. I'm looking at these leading names. Look, if you're an old school economist and you're using employment as your benchmark for the future of the economy, you're going to get rolled over. There's a tidal wave of excellence and money making. The golden goose is throwing money all over the place. But if you're an old timer looking at employment, you're going to pull your hair out of your head as stocks double and triple right in front of your face. Like,
Hmm.
I see what you're showing me, but Bill would tell me RS, relative strength,
Yeah.
relative in Webster, US Webster. What's the most important thing? I
Yeah.
mean, I haven't asked him in the last year or two, but I think he's going to tell you RS.
Well, I mean, a
Just
lot of times we'd say, look, you can take the price off, just keep that RS line on there because, that tells you almost everything you need to know, more so than the price, a lot of times.
it really does.
So yeah. Hmm. You know what? Getting back to kind of the labor side of things. Let's talk a little bit about the Fed and how that kind of changed things. So the Fed, of course, quarter rate point cut. That was expected. No one surprised by that. But there are these concerns of, oh, okay, is the labor market getting a little bit tougher? And as you said, this is, their dual mandate is inflation and the labor market. They are looking at both of those. Um, Despite the government shutdown, we're still looking at some numbers from private companies, ADP, for instance, to kind of get a gauge. The fact that it was, hey, December was kind of considered a done deal in terms of a rate cut, and that was kind of, hey, let's what was it? Far from it was the quote that he kept on repeating in terms of that being a certainty. So of course that shot the 10-year treasury yield up to a degree on that day. But is 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 that looking at the wrong stuff? I mean, again, the Fed cutting, in a non-recessionary environment. Some people are saying, well, gosh, how often does that happen? But what's your take on kind of just that Fed uh, change that happened on Wednesday?
I think that almost the bigger issue is the end of QT. Okay, the
Hmm.
Fed is no longer going to be reducing the balance sheet. That is as constructive as rates. I mean, not dumping or unloading billions and billions of treasuries is as important. And I believe they are going to cut in December. I mean,
Hmm.
don't fight the Fed, whether it's rates or balance sheet expansion, or we're not in balance sheet expansion, we're not in contraction anymore. Do not again. This is as basic as it goes. Like all-time new highs in all the indexes, and the Fed's cutting rates, and they're not going to reduce their balance sheet anymore. I think the Fed is dovish, very dovish, and they
Hmm.
and they there's one of the dual mandates is not going to get better. It's going to get worse, and the Fed is going to cut. As long as unemployment is rising, the Fed is going to cut. And by the way, Trump is definitively going to put a bigger dove into
Boy.
the Fed
Yeah.
shortly,
Yeah.
and the
Um,
market's looking way forward.
and even for December, let's make no mistake, it really was just like, okay, you went from a 90% according to the Fed futures rate, or maybe like 95% to like 67%, I think is what it's at now. So there is still a large percentage that are betting on a cut in December. It's just that it's not the lock of 95% that it was.
How
So
far is the Nasdaq off all-time highs?
like uh point
point
something. I don't
zero
know.
two three.
Yes, right, exactly.
Okay,
Uh,
I don't think the Nasdaq is too concerned about it.
mhm,
No, specifically the Nasdaq 100,
yeah,
even stronger. But I have to admit, okay, I'm telling I am very, very bullish, but with this max level of extension and the Nasdaq banging up against its upside resistance line, yes, sir.
mhm,
I have a large index short position on until we get back down or closer to the 50-day.
mhm,
Okay. Now, are we going to go into a regime of higher levels of max extension? Every time I wrote about it in the last year, 7%'s been about that. It was 10% early in the rally off of April, I
yeah,
believe. But it's been around 10 or about 7 right now.
mhm,
In the end, this is another reason we are so far from a market top. And I want to go over my list of topping signals.
mhm,
In the bull market, the major raging bull market signal tops, the Nasdaq gets extended 15 to 20% in the below off.
mhm.
Okay, we're at 7. We're 50% below the max in prior epic cycles. We're way, way, way off.
Mhm.
Can I run through those topping signals?
Yeah, and you know what? Just to your point, I would say that about 7% is kind of the historical norm in
Okay.
terms of that extension before you start running into a little bit of trouble. But when you have early in the session, you almost always get a little bit closer to 11%, especially in what we had, which was a V-shaped market. So 11% is kind of your base case there, and then afterwards it usually settles into about a 7%. Just again, based on some of the research that Chris Gessel has done with our lead programmer per bean. So yeah, very very good point on that. How it was, and now it's just kind of settled in there. But yeah, let's go through your topping signals. What else you got?
Okay, so I stumbled on this. My bubble indicators, which we are nowhere near a bubble.
Hmm.
Everybody out there, go to Grok and ask Grok what are the signals for the excessive or frothy AI revolution or semiconductor demand, and it lists like 6 or 7 of them, and only one has been ticked off. But anyway, exponentially hot IPO market. This is a market like I was so fortunate at Morgan Stanley. I was given a 5x allocation of IPOs. So every week I was in the syndicate department, at ground zero for the internet build out. And they'd
Hmm.
go, here's 10,000 shares of Palm Pilot at 60, and it opens at 300.
Hmm.
And that was just another day. Then there was Brocade and Redback and just tons of them. I believe there was 274 IPOs or 374 IPOs that year. I
Hmm.
chronicled it in that thing I did in Vegas. But anyway, we're nowhere near that. And the IPOs that we've had have been raising less money. They're not as big. And I think we've had like 50 IPOs this year that were meaningful. My partners are not calling me, throwing money at me. That happens at almost every single top. Partners sending me gifts. Now we will. The one thing is narrowing breath. We
Hmm.
we do have narrowing breath, but it's important to know. Very few people know this. When the railroads were being built out in America, railroad stocks accounted for 61% of the NYSE
Hmm.
composite. 61%. So we've got a long way to go. 2 to 3 years of net inflows to mutual funds. The public dumping bonds to buy equities. Not seen that. I play a lot of golf, and I go to the 19th hole when I'm finished. And when the bubbles are rocking, there's, do you have uniphase? Do you have this? There is there is no chatter. There's no, I'm the greatest stock market. I don't hear any of that in the 19th hole. When this thing
Hmm.
bubbles over, people are like, Jim, what do you think? There's none of that right now.
Hmm.
The yield curve, everybody's been, the yield curve was inverted
Yeah.
and it did not bring a recession. That's because the economy is cooking. Earnings overall growth is beating expectations. The inverted yield curve didn't matter.
Hmm.
Um, let's see here. I just want to tell
and,
you
and it was inverted for a while.
a long,
It
long
wasn't
time.
like it was just a quick little blip. That was inverted for a while. And usually that's not the inverted yield curve. Just so people know, it's usually not something that results in a recession like immediately. It's a it's a leading indicator, right? That a recession is maybe a year or 18 months down the road. But yeah, as you said, that recession just never came.
But the inverted yield curve has predicted 50 of the 32 last recessions. In other
Mhm.
words, it's not always right. I mean, the leading indicator, Bill would always tell me, it's the general market. How
Mhm.
is the market doing? The accumulation distribution on Nasdaq is like B, and
Mhm.
it's been B plus recently.
Yeah, for the Qs, B minus, accumulation distribution. You know what? I don't have it here, but yeah, for the Qs it's B minus. So very decent. But yeah, I would I'd rather see it on the Nasdaq. But yeah, so another thing on the sentiment side that's worth mentioning is even the what is it, the CNBC fear greed, or is it CNN,
Yeah,
the
yes.
AAII. There's all of these different measures of sentiment, and it's strange because here we are at highs, and yet you still have a lot of fear. A lot of money on the sidelines. Why do you think that is?
I think that the last bear market, by the way, people don't really recognize that the growth stock bear market we had that we just ended was one of the worst ever in history. And that's still, that memory's still with them. The deep seek tariff Mageddon scare in, March, April. Everybody thinks every little pullback is a disaster coming. And
Hmm.
until we break the 50-day badly on the Nasdaq, it's just a pullback, which is normal and a pause that cleanses. I also think there's a lot of political bias. I mean, when you sample conservatives versus liberals, the liberals think the economy, inflation's going to 6 or 8 or 10%, and the Nasdaq's going down. And the Republicans think the exact opposite. We have $7.25 trillion in money market. This is unheard of. To have a rally like we've just seen, and the public isn't just piling in, is amazing. We Last week AAII finally went more bulls than bears.
Hmm.
Finally. Now that thing is, it can stay like that for months and months and even years.
Right. Now, you mentioned some prior time periods, and I want to throw something at you that Mike Webster has been talking about. Not that we're gonna necessarily run into a 2001, 2002 type of period, but the idea of this kind of lockout rally, where in 1999, you had kind of a sideways action here. Things, you started breaking out of there, and then for anyone that was kind of waiting for the pullback, that pullback just never really came. It just kept on going higher and higher. And so at a certain point, you know, it wasn't really until Qualcomm topped in January, like January 3rd or something like that, that you finally got the market, pulling back. And then it was kind of like it was the pullback that you were wanting a pullback this entire time, and then when it finally did, it's like, ooh, now I don't want it, type thing. Um, do you think we're kind of in a similar situation here?
I think we'll get into one,
Hmm.
but I think it's a years away. We
Okay.
are, I mean, when you have the most exceptional technology unleashed and being adopted, you have to expect the most unusually expansive PE ratios, extensions, stock moves. People, I just don't think they understand history, and they don't see the power. Like people like, oh, I have a TML. Well, have you ever studied one like from breakout to top that they go up 500, 800, 1,000%? And they get a stock that's up 30, 40, 50%, and then they think their first pullback's the end of the world. And it's the
Hmm.
life changer of their life right in their hands, and then they fumble it. You have to expect the most exceptional things in the most exceptional innovation adoption cycle. It's so early. Like if you look at a chart of Yahoo against the market, it's like not even halfway. We
Yeah.
will. You absolutely must. I think it's very logical to assume we're going to end up in a blow off top that should be the biggest blow off top we've ever had. But we're not
Hmm.
there. We've got some climactic action, but not full blown climax tops. I mean, I wrote in the report a week or two ago when things started getting choppy. I said, how the reaction to earnings, and do they hold the 50-day? And so far, earnings have been mostly good. A few like Roblox and Meta, but mostly good reactions to solid. Very, very few stocks have blown up and broken the 50-day. When things get ugly, that's going to be wholesale. You're going to see that everywhere. But
Mhm.
it'll also be post, the market doubled in the last several months of the 2000 Y2K bubble.
Right. Yeah. I mean, there was
I,
a lot of
will say it
fear
again,
with Y2K, and it was a it was a nothing burger.
dude, you got to say, I'll say that the market doubled in the index doubled in the last few months of the Y2K top. Now, if the market doubled, what did the leaders do?
Yeah, they were. Well, again, you look at Cisco, and for the decade, it was 75,000% if you're into that kind of thing. I want to talk a little bit about Meta because you talked about the AI CapEx spend, and as much as the Meta chart, looks pretty ugly with it breaking below the 200-day moving average line. Certainly, one of the things that was a big takeaway was the AI spend, the CapEx spend that Meta said. It's like, hey, look, if you thought 2025 was a lot, hold my beer because 2026 is going to be more. So when you talk about this AI CapEx spend, what kind of metrics are you using? Are you using the guidance that's being given by Meta, or what are you using to kind of build that story for yourself?
I'm looking at the broad numbers of the Mag
Hmm.
7
Hmm.
cumulatively, but that's the answer to your question. But I'm really looking at, I want to be the general store to sell the pickaxes and the pans to the miners going up in the mountains. They're paying for gold. I want the networkers. I want the people who are like pets.com in 90, in 98, 99 that went to zero, but they had to buy all their gear, all their hardware. Like look at Credo. Okay, they're going from 7 GPUs to 72. People it's lost on people that the need for networking gear is exploding. Now, I don't know what ALAB and ANET are doing. Like, are they today or tomorrow? I'm not sure.
I think, yeah, A Lab I think is tomorrow. I think ANET is as well.
I think they are.
Yeah. Mhm.
And look, there's going to be, you just pulled up ALAB. It had a horrible blow up below the 50. There's going to
Mhm.
be problems, man. It's not a lock. Like just set it and forget it and go long and walk away. But I want to be in the right names that are like, I don't have to own Meta. Just buy my gear.
Mhm.
Okay.
Right. Yeah, no, absolutely. And again, that these big heavyweights that have a lot of cash, that they don't need to borrow money at whatever rate. They don't care. They've got all this cash and they can do a lot of this buying of gear. And that's what Meta said. Like, look, we want to be at the forefront of this, and that means buying buying as much as we can early. Another area I want to kind of look at is, and again, this is not as techy, but a lot of people are talking about how AI can benefit the biotechs, whether it's health or, XBI. This is one that did get hit a little bit. I think, one of the things that was bringing this down was QURE. But XBI overall has really kind of turned a corner here since September and has really kind of gone on a move. You had mentioned, I think, in your Roppel report this last time around, INCY in this space. Again, this is not something that is super speculative without any revenue or anything like that. This has, gosh, a, a little bit of revenue here. A billion each quarter, and growing earnings. What are you looking for in kind of this space to let you know where the puck is moving?
Okay. Before today, there had been a lot of super whippy action in here. And it
Mhm.
reminded me, I remember in 1998, I came in the office, I opened up the IBD, and they used to have like, I don't know how many graphs, 30, 40, 50 in a page. And most of the stocks looked just like Insight did before today. And you see
Mhm.
multiple high closes in there. There was a whale of a seller in there. And it broke out about 2, 3 weeks ago and it was rammed right back down, maybe 3 weeks ago.
Mhm.
It is now out, and they have a new drug for graft versus host, which is unfortunately what ended the life of my partner, who we co-founded the blockchain fund with. So
Mhm.
he had cancer, he had a stem cell transplant, and his body was rejecting it. So they
Right.
gave them these graft versus host drugs. Insight, and it allows the stem cells to engraft and basically save your life and
Mhm.
get your bone marrow back in order. I'm no doctor. Okay, that was like a Fisher Price explanation. But these guys have a brand new drug for that, and it's exploding. They also have three other drugs. This is Insight is liquid. I think biotech is an absolute must own area. I think it could be the single biggest area. I think it could be adjunct or it could co-lead with AI next year. I've been writing extensively about this in the Roppel Report. I had Insight in there. I think AXS, AXM, AXSM. Lily, by the way, is coming
Oh
out. I've
yeah.
been writing about all this stuff. And by the way, you want to the Roll Report, I'll give you it's basically like 50% off if you use the code IBD and buy the bundle instead of buying everything individual plus the code. All these names are in there, and I've been
Mhm.
talking about them forever. And
Yeah.
talk about a blockbuster drug that Lilly has, and they're crushing Novo Nordisk, killing them.
Mhm.
And it's just had a big hiatus. But if you look at the weekly, sorry,
Yep. Yeah.
okay,
There's Novo
Novo is a
Nordisk. Here's.
9RS. Now look at Lilly's weekly,
Mhm.
definitively broken the downtrend.
Yeah, and here again, you see that with the relative strength line, where the relative strength line has, now gotten back above its moving average line. So a very different look for it.
David Ryan told me 20 years ago. Again, I want 90 RS and higher, but the trend of RS is significant when they're turning up. And I don't really like to try to catch them early, but I just think the fundamentals are so critical, are so important, and so robust here.
Mhm. And I will say one of the things that I do is, okay, RS rating of 61, especially if there's a potential rotation where something hasn't been participating, I'll go over to the technical side here and I'll look at the RS 3 month, 88. That's telling you a different picture here. That
Totally.
the 3 month is a lot more robust. Even the 6 month at 79, a very different picture from this week 61. The 88 is where I'm kind of focusing a little bit more a lot of times.
Justin,
Another one that I know
what?
you. Oh, go ahead.
I wanted to look at the short position on XBI
Oh, okay. Short interest. Looks like it's 7.5 days.
times how many
So
average daily volume? It's over
average daily
100%
volume.
short.
Hmm.
In other words, not only are people absurd, unless these numbers are wrong, not only are they short, they're naked short. They've
Hmm.
shorted more than the float. If the
Hmm.
numbers are right, and if you look at, I mean, this thing's broken out. It is AI is going to help the future of pharmacology or not pharmacology of biotech development. But the money that's been spent, it's like 225 billion a year spent on R&D for a decade.
Hmm.
Okay, don't be shocked if in the next 2 years you wake up two or three times to a stock that has cured some form of cancer and the stock gaps up 100, 200%. Like
Right.
that is, it's almost impossible to spend that kind of money for a decade and not come up with something. But
Yeah.
I don't forget my opinion. The
Hmm.
market is in gear.
Hmm. Another one that I know you've been talking about on the Roppel report is Alnylam Pharmaceuticals. Now this got back below its 50-day moving average line recently, but is still kind of holding, right around this level of support. What's your thinking here?
It's a caution. The
Hmm.
the numbers are in gear. They have a monster new drug as well, which I wrote about. It's ramping up from 442 up to 495. It traded a little. It's somewhat illiquid for such a for a sizable market cap. Look, the guardrail's the 50-day. Now, percentage off the high is not horrifying,
Yeah.
but with the broad biotech market improving, it's not a good sign that this one. It doesn't mean it's toast. It's nowhere near toast, but it's on caution right now.
Hmm. Okay, let's shift gears a little bit because I want to make sure that we chat a little bit about crypto. IBIT, uh,
Ah!
If you look at this, it's been trading below its 50-day moving average line, but above its 200-day moving average line. Ethereum,
Worse.
I'm just going to pull up ETHA. That, you know, gosh, this was looking so strong, like it was just ready to rock and roll, and now it's been below the 50-day moving average line, below the 21-day moving average line, undercut some areas here. Is what's happening here?
Short term, you've got to be max hedged here. It's broke. Ethereum is broken down. It's entering it's close to intermediate term down. I am short a lot of calls in the money on my Bitcoin position in my equity fund. Long term, the charts still look just fine. Short
Hmm.
term, and it's turning into intermediate term, it's turning down, and it's a major caution. If you're a shorter term trader, this is a no go zone. And I hate to
Hmm.
say it, but the trend is the trend. I'm not a perma bull, but I
Right. Yeah.
also believe
Mhm.
if you could get a chart, which I put in the Roppel report every week, of stablecoin market cap, it's exploding. It's like this. It's the most powerful chart in the all markets. And that is they run on Ethereum and Solana, and Tron, but the market doesn't agree right now. I think it's going to be fine, but again, I can't play in the market when it is turned down.
Hmm. Yeah, no, makes sense. Okay, want to cover just a few more stocks that we haven't gone in as much detail. You mentioned Palantir, and of course earnings. They're out. I believe they beat on both the top line and bottom line. The it went up to like 222 in intra, after the market closed, and right now it's about flat from the day. So is this, I mean, it seems out of there. Again, there were things to shake you out. I mean, this day right here, that's not October 10th. That's not Xi and Trump spat. That is news, coming out in terms of some questions on, gosh, what I'm even forgetting. Some of this stuff seems so important at the time, and then like a month later, you're like, what was that? But there was news on that day that was being brought up. So a lot of sideways action. I think there was fear there, but overall support at the 50-day moving average line. And as you said, just kind of broke out. Now it broke out right ahead of earnings. So how do you handle something that does that, where you got earnings right around the corner, and what do you do there?
So you have to look honestly. The time to get big and get long was around the follow through date
Yeah.
in late April. So you should have a lot of cushion coming into a period like this. But
Hmm.
there's a lot of people, they say, oh, I hate earnings into extended stocks. Well, that's just not worked in this cycle. Like right now again, Palantir could implode down to 188 and retest the breakout tomorrow. I don't know, but I don't care about a 5% move. That's noise and jiggle. I would not establish a brand new position at 187 into earnings 5 days away. That's,
Right.
I mean, but as is, my position in Palantir has grown so massively. I had to hedge it. I hedged it with a bear put spread, and I
Hmm.
went 3/4 hedged, a quarter naked long. Well, and I hedged it 5% below the market price. I don't care about a 5% move. I'm not in this for nickels.
Hmm.
Uh, Palantir is the double whammy of AI and defense all wrapped up into one, with one of the most charismatic, intelligent, kick-ass leaders in all of all public companies, and it's just hitting on all cylinders. I don't even know what the numbers are. I haven't looked. I'll see how the market reacts.
Right.
By the way, the digestion after that red line you showed of the big shake that was not G driven. There's
Hmm.
Look at how goofy tight it gets in there.
Yeah.
About a week and a half later, and then the upside reversal days in there. That really encouraged me.
Hmm.
Also, if you look at the lows in August and September, the upside reversals and the super tight action, this stock, and by the way, leading institutions just started building positions in this thing.
Hmm.
So going into earnings, you have to expect any stock can blow up 20% down or up. So you have to be ready for that and position sized or hedged to deal with that.
Mhm. Absolutely. Another stock that has been, I know, high on your radar, uh, Robinhood. I do have a position in this one. This has earnings right around the corner. How are you handling this?
Again, I have massive cushion, but you have a mini pivot around 150, and it's the digestion is for me. It would be too short to start a whole new position there. But on earnings, if we have good numbers, definitively I'll add 3, 4, 5% more shares, and I already have a massive position. This
Mhm.
is, dude. They are now in the betting markets. This is our generation's Charles Schwab. They're the most innovative. Vlad, the CEO, is visionary, and it kind of how the unemployed people seem to be gravitating towards markets and gambling.
Yeah.
This is a Gen Z type play. It's caught the market's attention, and if you look at the monthly, this
Hmm.
thing broke out into an all-time new high, which I think is just the very beginning. Like the price of about, call it 70. People are like, oh my God, it's gone from 8 to 70. It can't go higher. It's sticking straight up in the air. Making an all-time new high like that is often the beginning of the move. Don't be shocked if this stock grows into one of the best stocks in of this cycle. It
Hmm.
already is.
Yeah,
But
right, exactly. Yeah, if you just look at from April, the follow through day, this has gone from, gosh, 40, 40 and change up to 140. And yeah, to your point, I had the chief brokerage officer of Robinhood on, and we were chatting on the podcast. And yeah, the gambling, with sports and all these different things, the prediction markets, especially because of the way the tax code has changed with gambling and how it allows you to do losses to offset gains and everything. It's really kind of punishing a lot of the gambling stocks, like your FanDuels and your
DraftKings.
DraftKings and all that. But you know on the flip side, you have something like Robinhood, where their prediction markets, their futures contracts. So how does that get handled by taxes? Oh, you get 60% long-term capital gain on your futures contract, and that's the way it's handling it. It's a futures contract. So yeah, I mean, it's almost like why would you go elsewhere? When you can do a futures contract and get the better tax treatment.
Justin, truth and freedom are breaking out all over. No longer does the media control the narrative. Elon Musk's purchase of X basically changed the world. The world now can go, are we going to have a new Fed governor? Is this guy guilty of a crime? Let's have a futures contract. It's
Hmm.
not talking heads telling you their opinion. Free markets are telling you the outcome based on, and it's as accurate as the spread on a football game at predicting the outcome.
Hmm.
Truth and freedom are breaking out in a way the world has never seen. The world's not controlled by 50 guys. The truth is coming out all over the place, and Robinhood and betting markets are part of that.
Hmm.
And
Yeah.
I wouldn't be shocked if this stock goes radically higher.
Hmm. Something that has been doing fairly well, but
Mm.
not so much anymore, DoorDash. And this could, go back to your point on the consumer. Look, I brought my dad and my sister to Robinhood, not Robinhood, Red Robin, and uh, a burger was $20. I was like, what? What? When did that happen? I have the benefit. I'm very very lucky. My mother-in-law lives with us and she cooks. She cooks these wonderful Mexican meals, and just whatever. She's learning how to cook vegan for her son. And uh yeah, I hadn't really gone out, that much, and I was stunned. So is DoorDash kind of a reflection of, the devastation that's happening in a lot of these retail restaurant names? And what do you think of it here?
So I was just, I thought this stock does have the magic elixir of uber liquidity and sky high earnings estimates. I mean, look at the numbers. The estimates are off the rails, but something's changed. The market has soured. you the initial pullback below the 50 2 weeks ago, I didn't really care.
Yeah.
But the market is looking forward. Look at the trend of the RS line.
Hmm.
That's going down around 515 on a clock face.
Yeah.
This is a no-go zone. I mean, it's just there. I don't care how I was dead wrong on Dash, totally. But it doesn't matter. Cut your loss, walk away. Is it because the consumer's struggling? Is it because AI are robo taxis or robo deliveries helping another company like Uber more? I
Hmm.
don't know what the market's ferreting out. I don't have a research team of 30 people, but my research team is the RS line.
Yeah, right, exactly. And again, back to your point on the prediction markets, it's amazing, when you kind of crowdsource your information, and you let the market tell you, it's often amazing at what it can suss out well ahead of time. And look, to your point, DoorDash does have, they did announce a deal with Waymo. Basically, you can have DoorDash deliver to you with Waymo. You hit a button, the trunk pops up, you take your stuff, and go on your merry way. But is Uber? You mentioned Uber. This is looking very different. I mean, the relative strength turning up, very tight action, back above the 50-day moving average line. Just a very different look. This cup with handle here, a very tight cup with handle, only 13%. Versus a 32% depth for this base here. A 13% here, 13% here, 11% here. So it's definitely getting tighter. What does that tell you?
It tells me that it basically tells me something is wrong with DoorDash
Right.
because Uber is in a almost parallel.
Mhm.
And the market is, again, this is not an elite stock. It is a good stock. It has a base. It's a very, very good stock, but it's it tells me that Uber's doing a lot better, or it really tells me there's a problem with DoorDash. This is
Mhm.
doing well, but it's nothing like the powerhouses in the market.
Mhm. One other area, gosh, I can't believe that like the hour is almost up, but one other
I know.
area I want to make sure that we touch on is gold because as strong as gold has been, and I mean it just went on a tear here. This is the GLD Spider Gold shares. It came down pretty significantly, but gosh, now it's just tightening up right there at the 21-day moving average line. Silver. I don't know if you prefer some industrial uses to your shiny metal. Silver, is kind of doing the same thing. Platinum. Uh, oop, if I can type, platinum is, that had a strong breakout from a cup with handle here, and again, just hovering right around that 21-day moving average line. What's your take here on gold?
So I was of writing that I thought it was a blowing off. I had a lot of things that kind of had this feel to
Hmm.
the buzz, the commentary. And then I had a friend another hedge fund manager, is telling me about this guy who was a whale who went all in about a week ago, just right before the top. And I went max hedged up there, and I thought that it would take a much longer period of time to digest, and it still may,
Yeah.
but it is really trying. If you look at GDX, it's the miners lead gold,
Hmm.
and it is really clinging to the 50. The
Hmm.
jury is out now. Again, gold doesn't move like a, a high octane tech stock. So that break is really, really, really severe. It's going to take a lot of healing and accumulation. Uh, and I do not suspect this is going right back to all time new highs in the short term. I,
Hmm.
my best guess is we go through weeks or months of digestion. And then I think go to much higher prices. But right now, I am in it, but I'm hedged a lot.
Hmm. One other area that I wanted to kind of touch on is we had this. kind of issue with the tricolor Zion Bank core had just a devastating. I mean, it kind of brought down the whole KRE, the regional banks. We're looking okay, and then down below the 50-day, right around the 200-day moving average line. Is this kind of giving you any shakes and shivers on the private equity, the credit market? Because a lot of times you see one cockroach and you're like, oh, there's more. Um, did Zion do that for you, or the tricolor situation with Jeffries and all that?
Credits, well, first of all, my domicile, my hedge funds at Jeffries, so
Okay.
I was really rattled by that.
Hmm.
But credit spreads remain as tight as they've been.
Hmm.
But JNK broke bad today. So I am, uh, and that break is a gap down. It's not like a day after day slow trickle. So I
Hmm.
am very alert to this. Uh, I I believe until credit spreads and junk versus short-term treasuries opens up, we're just fine. But it is a little bit of a caution. It's again, it ebbs and flows. I just didn't like the way it broke today. Up until
Hmm.
today, I was not really concerned. Uh, Jeffries is not encumbered, but the sector has issues, and we'll see. Again, it has not crept into equities in any meaningful way yet, but it is a caution.
Hmm. No,
You have to
absolutely.
watch it.
Um, so we still have a little bit more time left on earning season. Um, and of course, a lot of times, again, if you go with the seasonality thing, we do tend to have strong seasonal tailwinds, going into the end of the year. So with earnings season, still in play, some earnings still coming out. What's kind of your overall suggestion for folks, besides getting the Roppel report so that they can get this information on a biweekly basis?
Um, I would remain heavily long, partially hedged, as long as we remain over the 50-day MA on leaders and the broad market, and we continue to get mostly good reactions to earnings. Um, I know we're running out of time. I think it's really important for people to understand what the index is capable of because there's so much fear out there, and
Mhm.
everybody's like, oh, the market's going to break and it's going to roll over and it's going to be a disaster. The internet had been probably the biggest invention really like since the steam engine or like refrigeration. I just want to run by the numbers. So in 1990, we had a bear market. The NASDAQ was down 17%. The next year, 1991, it went up 57%. 1992, it went up 16.7%. 1993, it went up another 15%. In 94, we had a train wreck. It went down 2.8.
Yeah.
1995's recovery up
And I think that was a
40%.
recession. Wasn't there a recession in
A
there?
mini, yeah, yes, a
Mhm,
mini recession.
mhm.
1995, I'm sorry, 1996, 22%. 97,
Oh, you skipped 95
21%.
though. 95 was
Oh,
strong.
only 40.
Oh, only 40. Okay.
Only 40%.
My mistake. Yeah.
It's a train wreck. 1998, 39.3%. And that was the year we had the tie back currency crisis.
Yeah.
1999,
Long-term capital
84%.
financial. Yeah, that's
Yes.
all that. Mhm.
Okay, so I just went through 1990 through 2000, and we had one down year of 2.8%, and we had up 57, 17, 15, 40, 22, 21, 39, 84 in a row. That is an innovation that was getting adoption that pales in comparison to AI.
Mhm.
Okay, I was
Yeah.
working out with my trainer today, explaining to him. He's like, "Well, what does it do?" I go, "Well, AI is basically it's a computer program that's a human employee that doesn't talk back, doesn't need healthcare, and like I run the Roppel Report ads. My daughter does it for me. She takes the Roppel Report, runs it through Claude. It picks out 14 quotes, puts emojis in it, then she puts it in a AI algorithm that sends out 2 a day every day. Now, if I had
Mhm.
to do that myself and write it all, it would take me hours and hours and hours. It does it in like 2 minutes.
Yeah.
The efficiencies, the margins are unbelievable. And I would expect a decade of double digit. Everyone's like, oh, Could 26 possibly be another good year? Hell yeah, it can. It's most likely to. What
Right.
would you expect in the greatest innovations adoption cycle? You, of
Mhm.
course, you should expect it to go up.
Mhm.
Now, it's not going to be a free ride. Expect 4.1 pullbacks every single year that are so severe you need a follow through day to reaffirm the uptrend. And there will be very likely a long term credit disaster along the way.
Right.
But guys, this is an opportunity of a lifetime. What are the odds that I'm already 60, that I'm going to see another innovation as big as this? It's on like Donkey Kong right now to block up and uh, secure your retirement in
Mhm.
your kids' college, in your kids' life. This is a generational money making opportunity. And I think
Right.
people are like, I'm afraid the next pullback is going to be the worst thing I've ever seen. You're looking at the wrong stuff.
Mhm. Or even like, I think there's a fear of a 10% pullback, something like that, which again, a 10% pullback in the market does not feel good. But when you go up that many years, with those kind of gains, 10% pullbacks are going to happen. In fact, one of the hardest things when we were doing the market school rules, Mike Webster, Charles Harris, and I, we almost wanted to throw 1990 out because there were all of these 10% moves, like, you know, to the downside. But then it like immediately recovered. So if you're like, oh, a 10% move, I gotta get out. Well, it immediately, recovered. Now, granted, that does speak to sometimes a complacency that'll happen where you get people to say, "Oh, well, just buy on the dips, buy on the dips. That's all you have to do," and that worked great until, and Cisco and Yahoo, just buy them on the dips. Doesn't matter, just buy them on the dips, and that worked great up until 2000, when if you bought on the dips going down, well, what happened when Cisco went from 82 to 8, and lost 90%? Uh, that's not so good. But yeah, it's you got to expect, especially if we have some of those very big years, that 10% pullbacks in the market are going to happen, as that's just kind of part of the game, right?
Look, as long as the Fed is at our back and capex continues to grow, and the VIX is a critical tool that everyone's got to watch. As long as the VIX remains under 18, and honestly, the VIX is likely to go down into the single digits multiple times as complacency comes into the market down the road. But we're a billion miles from there right now.
Hmm.
Okay, look at today's upward spike and then close down. Okay, as
Yeah.
long as this, by the way, this will, I strongly believe, go into the single digits
Hmm.
down the road. That'll be a signal when we get, that'll be real complacency. VIX at 17, 18, 19, it's the opposite of complacency.
Hmm.
The opposite. Um,
And the last time it got down there was back in 2017, which, for those that remember, I think the S&P 500 had no more than a 3.4% uh, pullback from its highs. I think that was the max drawdown that the S&P 500 had in that 2017 era. So yeah, it definitely was just this steady uptrend that was, you kind of sat back and did nothing and just watched the money roll in a lot of ways.
Justin, I have to give people a word of caution.
Mhm.
I thought that it was in my head that every year, not every, a lot of years between Christmas and New Year's, that my stocks melted down.
Mhm.
Well, Josh Darwin quantified it for me. It's really bad. But then I said, in years post massive up years, and God forbid, two big up years in a row, the first week into the new year is massive tax selling.
Yeah.
They want to defer the gains out 18 months. So he ran the numbers on that. And it's statistically, it's not in my head. It's not just that my bonus check went, got shrunk. It's a fact. I will be on vacation skiing around New Year's and I will be max hedged. I don't care. Like at that point, the year's already been so massive with
Yeah.
these goofy leaders. I want to enjoy myself and I am aware of the statistic. I put it in Roppel Report, the whole grid that Josh
Mhm.
Darwin gave me. You have to see that.
Mhm.
It's enlightening. It's
Yeah.
not a free ride. It's going to be difficult. It's even with these stocks that are likely to go up 500% or more, there's going to be tests, many, many tests. It's not easy. Um, I make it sound easy, and I because I'm so optimistic. But even along this unbelievable rocket ride, I just call it the rocket train to Moneyville. There's going to be derailments.
Well, and I think, you're trying to give people the sense of what can make it easier for them. And certainly one of the big things is having rules, right? If you've done the studies, as you said, look at what true market leaders look like along their way so that you recognize, hey, is this kind of tracking, and when you look at them along the way, you have to be aware of those pullbacks that happen, and this is why a lot of times we recommend that people, if at all possible, do it week by week, because it looks very different, right? When you're in the middle of that pullback, when it's happening versus when you see that it recovers, pullbacks of the 10-week moving average line, uh, you know, they look so easy and like, oh, of course I would be buying there. But in the moment, right? You're always begging for the pullback to the 10-week moving average line. And then when it comes, you're getting creamed so hard that you're like, oh, I don't want to buy right now. I'm, in defensive mode. So yeah.
Bill wrote a note to me on a chart that I didn't handle. It was Apple. And he
Hmm.
said, the combination of having excessively large positions and margin will cause you to dislodge your stock. But you have to use the shakeout plus 3 to get back in. He drew it all out, put the numbers on it on a beautiful piece of paper for me. I'll just tell you this. If you know two things, if a stock is going to go from like BE, it went from 40 to 124.
Hmm.
The gold bar list is the new high list. It is inescapable for a stock to go from 40 to 125 and not be on the new high list every single move. I mean, I won't say daily, but definitely weekly.
Yeah.
The
If you're
other
looking at it
rule,
daily, you can't miss it,
you
right?
can't, dude,
Yeah.
it's going to be in there
Yeah.
day after day after day.
Yeah.
But also, you said Yahoo had, I think Yahoo had 7 corrections of like 50% in the internet build out.
Mhm.
Stocks living below the 50 are the no-go zone. That is going to keep you in the game for 40 years like me. Buying stocks below the 50 day it's almost nothing good. Now, occasionally you will get a stock in the you've had a follow when you have a horrible pullback where the market's deeply below the 50, only then can you
Mhm.
go after these names. But basically, staying out of stocks below the guardrail and following the new high list and RS is going to get you to where you want to go. I mean, the only thing that's going to stop you from getting super rich is your head game.
Mhm.
Getting fearful, fear and greed, and all the things that happen to you when you're a kid coming out. The market is the greatest psychologist in the world. It's going to expose your flaws, and if you don't have your mental game wired down, the market's going to expose your flaws and your fears and your greed and or impulsiveness, and you're going to lose. You get. It's not easy.
Yeah. But again, it's very doable. There's a lot of tools available, and of course, just one more time for folks that aren't aware, at the Roppel Report. That's Roppel report, report.com. You put in that code IBD. Also, Jim, you're a good follow on X at Uptick, and you give a lot of information on X, a lot of great stuff that you're talking about there. And yeah, of course, people can check you out here. And I believe you're going to be on IBD Live in a couple weeks.
I
Uh,
I
yeah,
agree.
don't look surprised here.
No, I know it's on my
I didn't
calendar.
mean
I'll
for
be
that to be
there.
a shock. So,
And by the way, every time I go on there, some stock breaks out and goes to Pluto. Like I think SMCI had like a 50-point up move.
yeah,
And I'm kind of trying to pay attention to the market and pay attention to the
right.
commentary. And so don't be shocked if
Uh,
something goes wild that day.
Yeah, and I think you're going to be on the 14th, if I'm not mistaken. But yeah, for those of you that are on IBD Live, definitely take a look at that. That's at investors.com/IBD Live if you haven't had a trial of that. But Jim, it's always a pleasure talking to you, man. It's one of the highlights of my month. So thanks a lot for
Seeing
coming
you,
on.
Justin, is the highlight of my month for sure.
Awesome. So yeah, we'll see you next month, and actually, we're gonna get that IBD Live appearance as well, and we'll have to have you on the podcast too, because who can have enough of Jim? So
Dude, in
really
Trader
appreciate
Talk,
it, man.
I'm buying what you're selling.
Perfect. Okay, you take care, man. Good seeing
Thank
you. That's going to wrap it up for us this week. Thank you so much for joining us, and we will see you next time on the monthly market report. I think, if I'm not mistaken, we typically are doing this on the first Monday of the month, which in this case would be December 1st. So, hope you join us for that, and we will see you next time. Take care, everybody. Bye bye now.